Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
David Morgan is our guest. He is an expert on the silver market. You can find him at silver-investor.com, home of the Morgan Report. You can also follow Dave on YouTube at Silver Guru, and he's on Twitter at Silver Guru 22. Hey, David, it's good to have you back on This Week in Money.
Well, thank you, Phil. It's good to be back with you.
Got a big deal coming up in October in your part of the world, the Silver Summit's 10th anniversary, Thursday, October 25th and Friday, October 26th in beautiful Spokane, Washington, the heart of Morgan country.
Well, thank you. Yeah, it's grown quite a bit in the last several years. As you said, 10 years now. Geez, it doesn't seem like it.
Wow.
But I moved it back to October. It's always hard to put something together that doesn't conflict with another conference. And unfortunately, this one does. I think it conflicts with the New Orleans conference. Okay. But regardless, dates are set, and the show must go on.
Silver Summit's been going on for 10 years now. How did it start? How did you get involved, and where do we go from here?
Well, myself, mining VP, or actually not a VP, was a CEO. And some friends of mine kind of just had the idea. We kind of sat down and talked it over, and we sort of discussed that, the best way to start something is just to launch it, and we did. And the first year, I think we had like 112 people or something like that. And but even in that first year, we had people from Belgium, France, Ecuador, South America, Germany, Australia. I mean, these 112 people were not just, people from Spokane. In fact, very few from Spokane were there. But regardless, it meant something to the silver bugs, and it still does. And, of course, it's grown to about 10 times that amount now. But it was an event that started with gusto, I would say, from the aspect that, people wanted to travel huge distances to be able to hear the silver story that contribute to it. So I'm very enthused about it. And as an aside, Phil, you know me pretty well. You've seen me do my showmanship. And this year I'm going to go ahead and I'm going to throw the silver suit on and walk up the stage with the famous paper money theme written by Montrose so many years ago, something I did in Vancouver only one time before. Yeah. It was not that well received, actually, the first time, so hopefully it'll be better received on this go.
David Morgan in the Silver Suit at the Silver Summit. That's coming up in October. You can find out more at CambridgeHouse.com. Great lineup, Dave, besides yourself. Eric Sprott, Michael Berry, Louis James, Jeff Berwick, and a guy I had never heard of before, Bix Weir. He is the creator of the Road to Ruta theory and founder of a website called roadtoruta.com. He's talking about an interesting angle here, manipulation of the gold and silver markets. How much manipulation is going on? What's the CFTC doing about it?
Well, just for the record, Bix has been at the Silver Summit. He's been to it as an attendee several times and as a presenter a few times. I know he was there last year, maybe the year before, but regardless, manipulation, it's a hot button, especially with the silver community. And yes, the market is manipulated, but not to the extent I think that most people believe. I mean, most people hear the word manipulation, they run. Why would I will never invest in something that can be manipulated. Well, most of the markets are.
Sure.
And most of them are, it's pretty obvious that they are, not as just from the aspect of how, if you know how markets move and you see movement that doesn't make any sense. But on top of that, I mean, there's data out there that's presented by the Pledge Protection Team, better known as the Working Group on Financial Markets. Excuse me, I got that correct now. And the deal is that the market cannot be manipulated from a long-term trend aspect. And the proof is that gold and silver are both substantially higher from where they were a decade ago. So the trend can't be manipulated. The trend is up, and I believe the trend is continuing to be up and will continue for more years. However, within the trend, any market moves by buying pressure or selling pressure. And so if there's massive amounts of selling pressure, it will move the market down and move it down substantially, and that's what takes place in the silver market again and again and again. No one that owns a commodity wants to sell it at a low price. Mm-hmm. They want it to sell at a high price. If you're a wheat farmer, you want to get the most money you can for your wheat. If you're a corn farmer, same thing with your corn. If you're drilling oil and you strike an oil well, you want to get the maximum price. I mean, we have a profit motive to to get the most for whatever we're selling. And so if you know ahead of time or any time that selling a huge amount of anything, Brussels sprouts or oil or whatever, is going to drive the price down, there's a motive to it. The motive is exactly that, to drive the price down. So what happens in the silver market and in the gold market and in other markets is that these massive amounts of paper silver are sold into the market, driving the price down substantially on paper, but that's what the price that is dictated to the physical market. And it scares the heck out of people, causes margin calls for those on leverage, and just really basically disrupts the market. And this has been going on again and again and again, year after year, week after week, month after month, year after year. And the authorities just kind of turn a blind eye. It's basically due to concentration. In other words, you couldn't do it if you didn't have the massive amount of power of many, many, many contracts. And that's what is taking place and again has taken. So, yes, it's manipulated. I don't think they're in there every day. I don't think they manage it that closely. I think when it starts to run up or they see an opportunity, and this is actually fairly easy to do, the opportunity being that the public is in heavily into the market. The market's risen several dollars, let's say, and they know where the stops are. In other words, they know that most of these people are on pretty thin margin. They know if they go in there and whack the market, that they can really move the price and capitalize on that and basically take the money out of the people that were betting on the silver price going higher. So it's frustrating, but all of these things do come to an end, and the reason for it is very simple. Paper doesn't equal silver. I mean, take a look at a piece of notebook paper and take a look at 1 ounce of silver and ask me if they're the same thing, and they're not. And because of that fact, eventually this nonsense will come to an end.
David, speaking of paper, what about the role of the Fed in silver and gold manipulation? I guess it's easy to point to the Fed and say they are manipulating prices with their policies.
It's really tough to know. I think it'd be a tough case to prove in a court of law.
Yeah.
But the Federal Reserve is really in a corner and have been for quite some time. In a debt-based monetary system, you have to expand it or it'll collapse. You have to continue to increase the money supply, because if you don't, then the interest cannot be paid. And the only thing these guys are really looking for, I mean, these guys being the banking community, are the interest payments on the debt that they've already issued. But again, for that to happen, you've got to continue to increase the money supply, or really the debt supply. And now they're having trouble doing that. They've tried quantitative easing QE1, QE2, Operation Twist, and all kinds of different methodologies that really are not having much of an effect as far as getting more money into the system. The banks are liquefied because they basically handed them cash. They're too big to fail. They've done rotten jobs. They've lost a bunch of money. So let's make the taxpayers pay for it. We'll just tap into them even more, and we'll give that money to these banks that did a rotten job. We'll reward them for failure, in other words. So that's a direct thing that we know the Fed has done. That's a fact. As far as indirectly in the gold and silver markets, again, it's tougher to prove, but I do think that they probably do watch the gold price. As far as the silver price and the Fed, I'm not as convinced, not that they wouldn't be in there, but there's a very strong correlation between silver and gold. Some of the gold-only bugs don't recognize it, but again, a fact is a fact, and the correlation is about 84%. So it's a very high correlation. So if silver were to take off and gold didn't, or vice versa, it would be kind of tough to explain why. I mean, you could see that happen. It's possible. But normally, again, they move together. So I think they kind of are almost required to keep them both kind of in line. And when we saw silver take off in April 2011, it took off before that when it peaked in April 2011. It took 5 margin increases before the market in silver actually started to really cool off and start to come down. Once the 5th one was issued and it started to come down, it came down substantially and rapidly. And just as a side note, Phil, all markets move down faster than they move up. Silver moved up very rapidly. So knowing what I know about markets, especially watching silver for like 4 decades, I was getting very concerned once it got above the $30 level that what might happen did happen. And that was a massive sell-off and a huge huge decrease in the price in a very short period of time, and I'm sure a lot of people got hurt badly from that. But, again, I was on shows like yours telling people, in the 30s, 35s especially, don't buy everything here. Don't use margin. Be careful. If you have to buy it, buy some. Don't buy it all. And words to that effect, because I could see it coming. In fact, I actually called the top at 48 for those that trade like me. I do both, invest and trade. But when you see something like that, I call them as I see them. And believe me, I was getting a lot of flack from other silver bulls that seemed to have a different opinion than mine. But I do my own work and said, no, I think this is it. I think this is the top. I'm getting out of my trading positions here. And lo and behold, it turned out to be a lucky guess, an accurate call. Call it what you may. It did take place.
This Week in Money is archived online at talkdigitalnetwork.com.
David Morgan from silverinvestor.com. That's silver-investor.com. Our guest here on This Week in Money. Let's update ourselves on silver. After falling almost 30% over the last 4 months, silver basically flat for the year. It's around 28. What do you see happening with silver? What kind of things are we looking at over the next little while?
Well, Phil, when you have the run-up that we had, and we had a mini bubble maybe, I say mini, I don't want to emphasize that word. It usually takes a year or perhaps even two to consolidate. I think we're done with the consolidation. As you said, year over year right now, silver is around the $28 level, which is basically where it is. The average price is around 30. So I think we've done enough consolidation. I think we've built a strong enough base to start moving up again. But off of these bases and that kind of a move where it's been as high as 48, there's still some stale longs out there, even in the physical market, that bought it, pick a number, 35, 37, 40, 42, whatever the number, and when the silver gets to that level, they'll be wanting to sell because they held it at a loss for a year or so, and they decide, you know what, I bought too much silver, which is possible. I mean, I don't think everyone should own nothing but silver. It's my specialty, but it doesn't mean that, that's the only investment. Anyway, what happens is you have to work through that overhead of resistance, but once that's accomplished, and it will be, then you've set a new high, and once a new high is set, then it can really run. Regardless, I think we've seen the bottom. I also believe that we're going to see higher prices by the end of the year, and I actually think it's going to be a contrary indicator or a contrary to the normal cycle, which means the bottom is in August. Again, I think the bottom has already come. So I'm looking for pretty strong price movement, silver moving to probably 35, maybe 40 by the end of the year. Gold up to the $1,800 level, probably better than that. Okay. And time will tell. We still have several months left, but the main focus for investing in metals hasn't gone away. In fact, it's stronger than it's ever been. You've got the euro problems, you've got the dollar problems, you've got the debt problems, you've got politicians that don't know what to do, you've got arguments amongst them, you got the banking community that's liquid but isn't loaning the money, and on it goes. So more and more people are waking up to the fact that this recovery is very weak, if at all, that the job situation is not really getting much better. There's a lot of unemployment in other foreign countries, foreign meaning relative to the United States, because I have a global membership. I have people that subscribe to the Morgan Report from all over the globe. But regardless, things from an objective perspective are not really that good.
We're talking to David Morgan. We're talking silver on This Week in Money. What do you make of this? Here's a European analyst saying, since the beginning of the year, silver has reacted more like a base metal than a precious metal.
I'd have to kind of agree with that. I mean, one of my mentors and very awesome guy, Harry Brown, he called it, a metal with two personalities, and I agree. I mean, sometimes it works or acts more like a monetary metal, and others more like a base metal. So I think for the way it has been acting, it's probably tracked copper a little closer than it's tracked gold over the last year. I'd have to look at that chart to make sure that's an accurate statement. But regardless, it is not acting like a safe haven status right now. But gold is off as well. So both of the metals have pretty much made these pretty big run-ups. Silver is much more substantial than gold. I mean, at that peak, the ratio was like 35-1 on the silver-gold ratio, and now it's like at 58. So silver has certainly fallen more than gold in percentage terms, but gold, again, is off as well. So both need to rebase and rebuild, and I think that we're there. I think we're ready to start moving up again.
Dave, how influential are hedge funds in all this? We got some CFTC data showing that hedge funds have doubled their net long position. That's still a long way below the 5-year average, though.
Yes, they're starting to come back into it. I think some of these guys, in fact, a fair amount of them subscribe to our work. But regardless, they're looking at a good entry point, and if you want to buy low, now is probably a pretty good time to get in. And then there's always the momentum players, which are in and out real quick, and it's actually safer if you know what you're doing, because you let the market heat up, and you get in there and you get out, and so there's a lot of hedge funds that do it in that manner as well. I do think that we're going to see more money moving into the silver market over the next few years than a lot of people, will believe, because we're probably through phase 1 and 2 of this bull market, but phase 3 is the longest lasting and biggest move in any market. And I think that the gold and silver markets are poised to probably be in the record books, in the financial history books, because there's really the only asset class that is trusted by investors at some point. That doesn't mean all investors. I'm talking about the pathetically small, maybe 1% of investors that are in gold and silver in one shape or another, meaning physically or by shares or ETFs or a combination thereof. So if we just doubled that and got 2% to come into the market, and that's, I think, very achievable, you'd see drastically higher prices in the metals.
What about the role, Dave, of ETFs? Latest news from ETFs is they hold around $16 billion in silver. That's practically a record.
It is, and the point being that most of these ETFs or holding companies, as refer to some of them, like the Sprott Silver Physical Trust, PSLV, these are believers in the silver story and the gold story, and they usually just keep adding to their position. So these are not managements that want to sell silver once it hits 40. So they have strong hands on the physical silver, and they're going to continue to add to their positions. And that means that the market will become tighter and tighter. And once the public comes in as well, usually the smart money, the managed money is usually in earlier, and that's probably the case again here. But then it starts to build momentum, and it starts to feed on itself. And if we get to the point where the physical market gets very, very tight, and I believe it could, then you'll have two sources vying for the physical silver, and that would be the industrial users as well as the investors. So you could have, DuPont, Dow Chemical, Mitsubishi, Apple Computer, Honda Motor, all looking to stockpile more silver than they normally do, because they're realizing that not only is the price shooting higher, but they don't have enough in inventory to take care of whatever's coming up.
Dave, one of the things we have to remember, and you just reminded me that one of the main uses of silver is industrial. That, of course, demand depends on growth. We got good news here from the International Monetary Fund, but I guess it's based on hope. They say the global economy is going to expand around 4% next year. That could be good for silver, but some of the recent economic news we've been getting out of the Eurozone, the U.S. and China, points just the other way to maybe a reduction in growth and a reduction in demand for silver. What do you think?
Well, I disagree with the IMF. I've read the article that you're referring to, and silver does have a huge industrial component. It's more than 50% of the market. But there's a lot of industrial use for silver that just never goes away, and there's a invested demand as well. So I'm really not that concerned one way or the other. I mean, basically, if there's a huge recession, since silver is 70% a product of base metal mining, you'll start seeing curtailment in copper mining, lead mining, zinc mining, and that automatically takes the silver supply lower. So I really am not all that concerned, but the driver is not industry. It's important, obviously, but the driver is really what's in the investment or safe haven status, and that, I think, has the most potential to really accelerate.
What about the gold-silver ratio? Something we often talk about. Are you still a strong believer in the gold-silver ratio? What do you think?
Oh, yeah. I mean, I've written articles for years that talk about it and also talk about how to play it. I mean, when silver got ahead of gold in April 2011, and the ratio at 35-1, a great trade was to go sell your silver and buy gold, so you could do a swap, or you could do it synthetically in some kind of a derivative with like a futures or an option or ETFs even. And I do those calls for our service, that, look, you don't have to do it all, but you might consider lightening up your silver position and moving into gold or back and forth. And if you do that judiciously, you can end up with a lot more metal over the long haul, meaning 10 years, 15 years, whatever. It's a very simple thing to do. The opportunities don't arise that often. But when they do, they are big opportunities. Let's say you sold your silver when it's at 48 and the ratio is 35 to 1, and you're buying it back now when the ratio is about 58 to 1. You'd be a pretty happy camper because you would be buying back a great deal more silver than you would have otherwise. And those opportunities, again, do appear from time to time.
We're talking to David Morgan. Speaking of opportunities, here's an amazing number. Bullion sales have tripled in the last 5 years. Obviously, people are worried about paper currencies and the ability of our governments to balance things. That's got to be an interesting indicator.
Well, it really is, and you're right. I mean, if you go back just over the last 15 years, the average amount of Silver Eagles purchased were about 10 million a year. And then a few years back, it moved to 20 million a year, and now it's about 40 million a year. One thing that's not really talked about very often is how much is held in the coin form. And the coin form of silver, and we're talking about official government mintages like the Canadian Maple Silver Maple Leaf and the U.S. Silver Liberty and the Euro Silver ounce and what's in the Lunar Series in Australia. Anyway, anything official, that, and you add all the other coins that are unofficial, which are silver rounds or known as medallions in the trade, and you put in the junk silver, you've got roughly 1 billion ounces of silver that's held in coin form. And you have roughly the same amount in bullion form, in other words, in 1,000-ounce commercial bar form. So there is probably 2 billion ounces of silver. And again, if you go back to earlier times, there was not nearly the supply of Silver Eagles that there are now. That program started in 1986. Same thing with the Canadian Maple Leaves or the Euro Silver Ounce or even the Australian coinage. So the supply keeps being added to, and investors are very willing. In fact, there are more and more coming on board to the silver story, as you indicated, and buying more and more on an annual basis. And I think that trend will maintain.
You can find David Morgan at silver-investor.com, home of the Morgan Report, or follow his Twitter feed at SilverGuru22. And don't forget YouTube, Silver Guru. I think we got it all. Should mention also again, Dave, the Silver Summit's 10th anniversary. That's October 25th and 26th in lovely Spokane. You can get info at CambridgeHouse.com. Hey, Dave, thanks for your time. Good to talk to you again.
Phil, my pleasure. Thank you.
This Week in Money is archived online at TalkDigitalNetwork.com.
David Smith is a precious metals analyst and frequent contributor to the Morgan Report at silver-investor.com. He joins us from his home in Seattle, Washington. Hey, David, it's good to have you back on This Week in Money.
It's great to be back, Phil. How are you doing today?
We're doing just fine. Today, we're going to do something a little different. We're going to step back a little from the day-to-day activity in precious metals. We want to take a look at what a precious metals analyst actually does. We're going to talk about the places you've been, and we're going to find out what you learned and how that can help us as investors. Let's start off with how you got involved in precious metals in the first place. How did you do that?
Well, I've been involved in precious metals themselves for a long, long time. In fact, I actually participated in the last bull market. I did it in 1980, but I became very interested in mining stocks in the interim period, and I started doing mining tours for David Morgan in the Morgan Report, I guess about seven years or so ago. And my first one was, he asked me to go down to Argentina and look at a property down there in Santa Cruz province. And so talk about a learning curve,
Yeah.
I knew I didn't want to have carry-on baggage, so I took a day pack and an 8.5-pound laptop and lived out of that day pack for almost 10 days. And now I have a 2-pound laptop, so that alone makes it a whole lot nicer to take these trips. Since I've been back to Argentina a number of times, but always find it to be very fascinating to go on these tours.
Walk through with us what happens when you get to the mine site itself, which is usually a long way away from anywhere populated, right?
Well, it really is. Or sometimes, actually, I've been in some places where you're literally right in town, so to speak, but usually they're out a little ways.
Yeah.
But, before we ever even decide to go on a trip, there's quite a bit of groundwork that goes and thinking that goes into these trips, because we don't just show up because somebody asks us to go or something like this. Sometimes David will ask me to take a look at a particular project, or maybe someone has talked to him from a mining company, and he's thought, well, this looks interesting. Let's look into this. He and I might go together on a trip. And we ask ourselves, will this be something that has potential value for our subscribers? And is this something that could maybe put the risk reward in their favor if they look into it and perhaps decide to buy shares? And we want to know, we look at the background of the company itself. Do they look like they've got a track record? Are they stable? Do they have good financing? Do they have a good business plan? And do we feel that management is really on the up and up? And a lot of people are in the mining sector, maybe most of them, but there are some people that are not real confident. They don't have a track record, and they've tried and failed a number of times, and they just don't come through for the shareholder. And there are a few bad apples. So we really want to try to avoid those, and we've run into a few over the years that we just wouldn't touch with a 20-foot stick. So we do a lot of thinking beforehand. Sometimes I'll find a project that I'm interested in, and I'll propose that to David that I'd like to go take a look, and I'll contact the company. And when we talk to these people, we never say we're going to write up a report about you. We never guarantee that, and they know that we're going to tell it like we see it. And we have that obligation not only to ourselves in terms of our ethics, but also in terms of giving our subscribers the very best thinking that we have.
Now, you have basically two constituencies here, the miners themselves, the industry, and also the average investor, right?
That's true, and we want to maintain our networking, and we find that over time when we are really upfront about what we're after and what we try to accomplish, and telling what we feel is a fair story, and even not going to on a tour if we don't think we can tell a good story about it.
David, you spend a lot of time in South America. Give us a sense of what the mineral wealth is like down in places like Argentina and Chile. Obviously, it's a hot spot.
The mineral wealth is just incredible, and Santa Cruz province to me is one of the very best places to conduct mining, exploration, and production, and not just because it's got a lot of minerals there, but I mean this area has only been worked on for not much more than a generation, and really intensively maybe the last 10 or 12 years, and so there's so much more there that can be looked at, and it's a relatively dry area. You don't have the issues in very few cases of being a situation where you might contaminate groundwater, or whether you've got rivers nearby or something like this. The population can use more employment, and there's a workforce that's very interested in doing good work. And so a company can go in there, and these companies today are more and more observant of environmental considerations. You can go in there and do a mining project, and a lot of world-class potential there, and not leave a big footprint in terms of its impact on the environment.
Okay, so when you get to the mine site, what happens then? You arrive there and you meet the people involved in the company. What do you look for when you're at the mine site that can be helpful?
Well, what I would call this phase when we get there the information upload. We're going there to take a look and see what's going on firsthand. Talk to the people in management that are there at the mine site. Talk to the workforce. Watch them working. See how that goes. Look and see what accommodations have been made for the workers. How do they relate to the locals? And this is especially important in a fairly populated area like many areas of Mexico, where some of the more famous silver mines are located and silver exploration plays. And this is critical. That they have good relations with the locals, that when we go through these little towns on these dusty roads, you ask yourself, do the people that are driving us along, or do they slow down so that they don't create a big dust storm as they go through town?
Okay.
And believe it or not, that really is an important situation. And how do the locals look at us when we drive through? So you get all sorts of little nuances that add to the bigger picture of what you're looking at. Because if we write about a company, we want a company that we can be proud to write about, and that we feel is doing well for the shareholders and doing good for the locals as well too.
What's the attitude of the locals? I mean, we read horror stories in the papers about the attitudes of the federal governments of these countries nationalizing some operations. But how generally do the locals react to a mine in their backyard?
Well, again, it has to do so much with the the groundwork that was laid before the mine ever got built, or if it's one that's maybe been started up, because, there are a lot of historic mines in Mexico and Chile and Argentina, which especially in Mexico, where, before the invention of dynamite, you could only go in a maximum of about 100 feet into an area to actually dig out the minerals, and so those were closed down, and a lot of these were found where you have mineralization on the surface. So now they're going deeper down, sometimes 500,000, 1,500 feet, and that involves a lot more infrastructure and things like this. So the key, I think, is to go in and talk to the locals and get their buy-in and let them know that you want them to share in what you're doing in a fair manner, and that is so important. In fact, in Peru, and I believe this is in the last few months, they've actually added that as a qualifier that you cannot even begin to start a project unless you've had a full consultation with the people in the area, and everybody is on the same page about what's going on. And of course, that complicates things and takes a little longer, but ultimately, it'll save, I believe, some of the problems that are going on now and some of the larger construction projects, for example, in Peru, which have been in the news lately, and even a couple of places in Mexico. Those things can never be totally eliminated or guaranteed that you won't have problems, but if you're proactive, it makes a big, big difference.
Now, when you get to the mine site, do you have a checklist that you run through? What kind of things do you look for that make you decide to either go ahead or in some cases, go back home?
Well, sometimes I'll go to a place that they're still looking for mineralization, or maybe they've just had a set of drill holes or something, but most of the places that I go to either have a project that is going to have a mine that's been permitted or soon will be, so that they'll start production, or they have a situation that's already in production. So when I go to the mine, I ask myself, how are they producing in relationship to their capability, their times per day? What kind of a head grade's going in there? Is there maintenance? Is it safe? The maintenance of the mill itself, is it functional and safe and for the workers and even for me walking around in there? And I look at all those things to kind of get a sense of just how management is handling things and how agile they are dealing with the inevitable problems that come up in a production cycle.
David, what's your experience been with management of these companies? Are they generally helpful, or are they just trying to sell you a PR story?
No, everybody wants to tell the best about their company, and there's a fine line between telling the story and promoting it beyond, some situation that just could never be. But here's the thing. I don't care any mining operation that you go to, no matter how good it sounds and no matter how good it is, there's always the imponderable of things can go wrong. You can run into grades that are lower than you might expect. You can have a mine shaft that collapses. You can have all sorts of things. You can have a communications problem with the locals. You can have difficulty getting your concentrate in and out. And it's how management handles that. And that's what David and I look for over the longer run. And some of these companies we've been watching for 5, 6, 7 years. And we watch how management handles these things that come up. Are they proactive? Are they quick to get things going and get on? Are they transparent with what's going on? And those are the people that we truly respect and we like to continue following, because we know that they have the agility and the confidence and the professionalism to keep on going and keep their program growing, which will benefit the shareholders and also the local economy.
This Week in Money is archived online at talkdigitalnetwork.com.
David Smith, our guest on This Week in Money. He is a precious metals analyst with the Morgan Report. Silver-investor.com is where you can find what David's doing. We're talking about some of the mining places you visited, some of the countries that you've been. A lot of places in South America. You must have some pretty amazing stories. Any colorful characters jump out at you?
Well, there are. Most of the colorful characters that I've run into in my trip in South America have been animals. One of the trips I went to, I was interviewing the director of this one mining company, which actually has since become a very large silver gold deposit and was bought out by a major pretty recently here. And while I was interviewing him, I was doing a video, and in the background was a rooster. And it seemed like every time I asked him a penetrating question, this rooster had to go off and make a lot of noise. And we thought that was pretty funny, so we waited a little bit. Finally, the rooster kind of calmed down, and we started up again. And then the horse started making all sorts of neighing sounds and noises. But it wasn't enough to ruin the interview, but it certainly added local color to it.
What's the most beautiful place you've been in South America? Of all the places you've been to, what would you say is visually the most striking part of South America?
Well, I'll tell you, flying over parts of Chile on the way to Chuquicamata, which is one of the world's largest copper deposits, and you go out there and it looks like you're on the surface of the moon when you get there. But on the way, looking down at some of these beautiful areas, and some of the places that will be like an oasis where they have vineyards, and then outside of the valley is like a desert type of a thing. And I have to marvel at people all over the world, how they'll take some area of the world and turn it into a real Garden of Eden in terms of the way that they live there. So I think some of the places in Chile are absolutely beautiful, and I think certainly in Argentina, Chubut province in Argentina is a beautiful area. Not a lot of water there, but a couple nice river systems. And certainly along the Atlantic coast of Argentina at Puerto Deseado, I think that was really beautiful, even though they have high winds there. But looking and seeing how the river snakes out into the ocean, to me, was quite fascinating and beautiful.
Okay, so apart from the beautiful scenery, you are actually down there working. You're looking at these mines. You're looking at what's going on. So you take all this information back to Washington State, and at that point, you amass all this into some kind of report. That's how I understand it works, right?
Right. I try to take notes when I'm down there. I do often do a video interview, and David was kind of one of the first people that came up with this about us taking the camcorder along and interviewing people. And we had, some really neat interviews, which we continue to do. But look at the data. I go back to the website, look at all the data that's there, read the news releases, go back and talk to IR and management. And also what I like to do, and this is something that I consider a professional courtesy to management, when I get the data down, I send them a draft of the data. Now, not my opinions, which are going to go into the report later on, but the data that I've collected to make sure that I have done something that is just incorrect, or that I may have inadvertently stated something that's not in the public realm, which shouldn't be stated. But I want them to see, confirm to me that the data is correct. That I misstate the head grade or something like this. And so that I get that to them and they come back to me, and then I have the correct data, and then I go ahead and put that into the rest of my report along with my conclusions and my observations and things like that. And so to me, that's part of that process, the professional courtesy and the transparency and getting it right. And nobody's perfect, and I try not to make mistakes, but I certainly don't want to say something that shouldn't be in the report because it isn't public knowledge, or simply make a mistake either on the timeline or the type of data that I've collected.
David, most of us read about gold and silver miners. We check the fundamentals, we watch the share prices, but it's hard for us to understand and grasp the product, what actually comes out of the ground. And I guess that's where you come in. What kind of value does this reporting provide to the subscribers of the Morgan Report and to us as the general public? How does what you're doing help us understand the product itself?
Well, when we talk about perhaps the stated reserves that the company has, if it's a producer, or the measured, indicated, and inferred resource that they're looking at, or what the implications are for more of the same on that project, we get a sense of where it can go and how long the life of the project might be, if indeed it becomes commercially feasible. And so people, the investor wants to see an operation that's going to be around for a while, that's going to pay off the initial investment. And one of the things that can make it more difficult, if you've got an open pit, there's a whole different setup versus a hard rock mine, because hard rock mining, it's harder to find just how much resource is really there. And so sometimes the company will spend all their money to find 6-7 years of resource out there, rather than maybe having 3 years, with the implication that we've got a good deposit and the grades will probably stay pretty similar. And so they have to strike that balance, not only for themselves but for the investor, so that they don't run out of money before they actually get well involved in the production. But these figures, then the investor can compare them with other mine sites and other projections over time to see if that's the kind of story that they want to dig further into. And that's the thing I want to mention about the Morgan Report and David Morgan and all of us on the team, is that we don't tell people what we think they should do. We say, here's the information. We might give our opinion a little bit, but we don't say, this is a slam dunk or anything like that. But you guys, this is a starting point for you. This is our best thinking on it with the information that's as accurate as it can make it. Now you go ahead if you're interested and proceed further. And then if you do, we will discuss with you a good way to leg into a particular investment if that's what you want to make, in a way that you don't overcommit yourself. So we're kind of teaching them a little bit how to fish rather than saying this is where you should go fish.
Precious metals analyst David Smith, our guest here on This Week in Money. And, you know, having boots on the ground must give you a pretty unique perspective, Dave, on the share prices and the fundamentals of these companies. How does what you do affect your investing strategy, and what kind of advice can you give us in terms of investing in these companies or investing in gold and silver?
Well, you know, one of the things I've learned is that no matter how good a project is or appears to be, things can always come up that can change that.
Okay.
And another consideration is that I believe that any mining story has a certain shelf life, and you can't predict how long that'll be. But I know some projects that are as valuable today and as viable as they were 5-6 years ago, and yet you have a company that's selling for 1/5 of the price. And part of that has to do, not that management didn't, fulfill what they said they were going to do, but sometimes these development times are so long that people lose interest and they lose patience and they move on. And some of these stocks that are languishing right now, they may go up in value by 10, 15, 20 times when the fulfillment of that vision comes about, and a lot of investors just won't be there. So if you've overcommitted your funds and you don't have the staying power and you can't keep the picture big enough for what you're investing, chances are you'll leave before you get a fulfillment of what you thought would be your potential profit goals. Or you may take a big loss and get out. So we always try to keep people to have a perspective of taking a longer view at it and not committing all their funds at any one time.
Yeah, you and I talked earlier about the idea of buying in tranches or slices rather than going all out.
It's absolutely critical. And I'll tell you, a few years ago, I wasn't as much of a believer and a practitioner of this, and I knew it was important, but I didn't fully internalize it emotionally as well as intellectually. And now I think that I'm much better at that. And I'll give you an example. Just a couple months ago, I submitted a report on a company up in Yukon, and I gave an example. It was trading a little over $2 a share. And I gave an example, just not as a prediction, but say, this is what you might want to do. If you feel you have to have a position now, go in at a limit price. Let's say it's trading at 220. You go in at 220. You buy your first tranche, which might be 1/3 or it might be 1/5. And then you drop down another, say, 10, 15%, and you put another limit order in, good, they'll cancel, and you do the third one. After that, good, they'll cancel at about another 15, 20% lower price, and then save a few dollars for what Doug Casey calls stupid cheap prices, just in case we get that. And you know what? It's interesting. All three of those orders, as I suggested, would have been filled for a person that decided to do that, and prices are actually trading below that area now, and they may get stupid cheap. I don't know. But the point is, a person who fulfilled that order by doing tranches, whether they came up with the ones I suggested or put in their own price levels, would now have a full position that they wanted because they determined beforehand how many shares they wanted and how much money they'd spend, and they'd have that full position with a much lower average price than if they went all in and spent every cent they had on their great idea. And I can tell you, I used to be this way, and I'm not anymore, and I'm a lot more relaxed.
Hey, great place to visit in October, the Silver Summit's 10th anniversary. That's coming up October 25th and October 26th in Spokane. Details at CambridgeHouse.com. Should be a great show. You're going to be there. David is going to be there. A lot of great people are going to be there.
That's a tremendous conference, and it has the size of there's a certain intimacy there. You have some of the biggest names in the silver business there, and some of from gold as well, too. It's a beautiful setting in Spokane, and I hope all of our listeners get a chance to come down because they won't be disappointed.
David Smith, our guest. He's a precious metals analyst and frequent contributor to the Morgan Report at silver-investor.com. Hey, David, it's always good to talk to you. Thank you, sir.
Take care, Phil, and thanks again for the call.
Thanks to our guests, the two Davids, David Morgan and David Smith. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with another edition of This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.